Hey, good day, everybody. Still here for the Daily Market Pulse. This is Tuesday, July 15th. We got the hump day for the month. We saw stocks drop, but also pair some of their losses following commentaries from Yellen. It was at higher volume, however, not so good. Distribution days were added. So not the greatest necessarily. I don't think I've got. Let me see. Do I have it? Do I not have it? Yeah. So it's actually the Dow Jones was pretty much a sort of spinning top doji formation, kind of indecision right at a breakout area. It was actually a little bit higher earlier in the day, but the Dow actually looks fine. Looking for potential breakout higher. Dark cloud cover appearing right now, but it's not a very strong one on the S&P. No big deal. Window right below holding. The 8 moving average holding as well. Not in real jeopardy, however. The same thing here, 8 moving average on the NASDAQ. Following a doji yesterday in the window. Support being held for the time being. That's where we stand for now anyway. TSX still sideways consolidating in my opinion right at the 20-day moving average. No big deal there for now anyway. Nothing really harmful as of yet. We have the DAX kind of holding steady after a bounce near 9,700. US dollar, Canadian dollar, which likely will be volatile. With the Yellen commentaries, this is today's candle. So a nice green candle continuation. So we saw a bullish move, slight pause yesterday. It looked like everything should be going back toward 108 likely. Sure enough, it is. Euro, on the other hand, may have dropped, which it usually did. There it is into the lower Bollinger Band. Targets still remain around 135 or 135.25 perhaps. Treasuries were up at one point or another, but then declined. You can see another volatile day here as well. Spinning top, kind of a doji below 37, but above 36, so it's kind of stuck there for the time being. Yen still looks like it wants to break out. I don't think that's today's candle. It is today's candle. It was green at one point, so it's come back a little bit back to the moving average. The overall pattern still looks like it wants to go to the upside. Gold and silver had a huge flush, you remember, yesterday. It had gone a little bit lower again. So the target from here was likely the moving averages, which it pretty much very closely came to. There it is right there, 1295. So I think this could be the end of the road. It's possible it comes down to about 1285 next, but this could be very near the end of the road where a bounce is likely to occur as the stochastics gets closer to oversold. Silver came down just a little bit more as well, just about 2050 or so. There it is, 2075 actually. So could come to 2050, I guess is what I meant to say. 2050 is the 200-day moving average and former pivot area. It may come down to that area, then look for a bounce in that area. Crude flushed fairly aggressively and then rebounded nicely off 99, the 200-day moving average. So it might be a support area here. It might be done. There's a little bit of a divergence on crude, so I'm expecting this could actually go higher through 101 back toward 102 plus. We'll have to see if that's going to be the case or not. Small caps did not fare well at all. So in terms of risk on, risk off, it was definitely risk off. But it's come back to retest the 50, retest 114, retest the lows from only 3 days ago, including filling the window from yesterday. So no huge foul here as of yet. And if we go over to the VIX gapped lower on the open, then popped up, but still remaining below resistance, below and into the window, currently at right around 12. Here also, no real harm on the long side just yet with the VIX.